Hello everyone, welcome back to the channel. This is Fair Value Finder, and today is everyone's favorite series. We're most of the way through July, so we're going to take a look at stocks to buy and avoid in the month of July 2024. The portfolios, as always, are right here. So we'll go through how things are performing so far, and then we'll look into the actual what to buy and avoid for this month based on their fair value fundamentals and some growth prospects. We're going to start by looking at the stocks I am buying portfolio. We now have 11 stocks in there. It's up today, up 2.56% since we started this series, and we have realized through dividends and trades another 2.5%. So in total, it's up 5.8%. And then we have the benchmark SPY up 2.38% in the same time frame, and through dividends is up another 0.25. So about 2.5% there, which means we're beating out SPY by 2.5% right now. Essentially double the returns of SPY on the stocks I am buying portfolio. And then the stocks that I would avoid, not necessarily stocks that I would sell, but they're just very overvalued. I don't see a whole lot of growth in them going forward. We've already closed out 2 positions to lock in some losses of 1.1%, but FICO has been really driving this one up. And in total, it's up 9%. Once you factor out that 1.1%, we're talking right about 8% there. So for the stocks that I'm buying, we can take a quick look at the holdings here and see how things are performing. So we do have 3 stocks that are down: PayPal, Ulta, and Caesars. And the majority of the portfolio is up, with Generac leading up almost 20%. The biggest dip that we're seeing is Caesars. Not a huge surprise on that one. I do think that we'll have a good bounce back from that and PayPal going forward. Ulta is still trying to find a bottom off its drop. So all of these are most likely, well, I can tell you now, all of these are still on the buy list, and I'd be doubling down on these. Last month, we added Caesars and Ulta for the first time. They're new to the portfolio, and we're still trying to find a bottom. That is it for the stocks I'm buying. And then a quick look at the stocks that I would avoid, sorting it in the same way. We have half of it is up and half of it's down. It's just FICO is really most of the gain. If it weren't for FICO, this portfolio would actually be down. You see total gain $960, FICO $1,012. I did a video recently where I said, were we wrong about FICO? I don't really think that we were. This thing is not moving in line with its fundamentals at all. So definitely some big things baked into the future for this company, and I don't know that they're going to come to fruition. So it's going to stay here. We can keep doubling down. I'm curious to see last month. Yeah, last month when we did the video, FICO was at 1436. So the fact that it's now up to 1580 is absolutely insane. Moody's is in the same sector. They're only up 6%, but it just looks to be that sector is definitely hot right now. Microsoft essentially flat. Garmin, there's not a whole lot of growth in this one, and it's overvalued. So I think that thing will most likely be coming down after the next 2 quarters or so of earnings. It's just at a very elevated price right now. And we'll go and look at the sheet and see what the actual fair values for all of these are. And some of them we might need to recalculate and reconsider. So here we have the sheet. We're tracking all of the fair values and the growth rates for these companies. If you have questions about individual companies, go check out the videos where we calculate our thesis for these annual returns and use the fundamentals to figure out what the fair value is. But to start with, we are looking at Alibaba, still incredibly undervalued, along with PayPal, Caesars, STLD. I don't know how I'm feeling about this one. I personally closed out my position because I was up enough And I looked at this with our thesis. Our annual return is 4%. Yes, it is 30% undervalued based on the fundamentals, but a 4% growth rate is not worth holding in my portfolio personally. So I sold out of it. Decent commodity exposure to steel, but I don't think it has a place in my portfolio. Vici Properties, they're bouncing back very strongly. Barrick Gold, Ulta Beauty, Eastman Chemical, and then Generac Holdings. Those, I would say, are likely to be market outperformers buying in at this price over the course of the next year. And the stocks that I would avoid right now, we have a lot of the same. Shopify, Palantir, FICO, Snowflake, Moody's, Garmin, Ferrari, Microsoft, Old Dominion Freight, Oracle, Chewy, Google, ASML, Waste Management, Union Pacific, and MasterCard. Those are definitely looking like they are set to underperform the market over the course of the next year because they're so high value-wise at the moment. Now, these are all great companies. There's stocks like Palantir. I am not putting on the stocks I would avoid list. It is a really good growth stock, so I don't think that it might even be considered a bit of a meme stock, and I think that it won't really move in relation to its value. That's definitely the one that I would call out of here. And then you have Microsoft FANG stocks and some of the larger stocks in the S&P. They're, of course, going to trade at massive premiums. Essentially, everyone holds some of them if they hold an index fund. So Microsoft, Google, they definitely have a bit of an advantage. I wouldn't recommend shorting any of these stocks, really. I'm shorting Snowflake personally. I've made decent money off doing that. I'm trying to see it get back down to a decent valuation. And with where it sits right now, it's nowhere near that. Current value 131, fair value of 52. And then we have some in-between stocks where you're not going to get crazy returns, but that might be worth putting on a watch list, keeping an eye out. This would be stuff that we're looking at. No return here to a small return up to 6%. So Intuit, Palo Alto, Uber, Airbnb, Amazon, and Qualcomm. That is what I'm looking at for this month. We've analyzed some stocks. Some have made the list. Old Dominion Freight Line we took a look at in the last month. It was solid enough fundamentally that I added it to this list. Great dividend stock. A great dividend growth stock, but very overvalued right now. I've got some videos coming out soon. I know LVMH I took a look at. I think that it's at a decent value right now. Just reanalyzed Birkenstock, and they are back to slightly elevated, but almost to the point where they could be considered again. And I'm fulfilling your requests whenever I get the chance. So there's a list of stocks that I still want to analyze. Hopefully they make this list. I know CrowdStrike, off this huge dip that they're having, I'm waiting for it to bottom out a little bit more, but I want to do an analysis on that and see if it's worth buying in off this dip. Because as a value investor, that's the type of stuff that we look for. So I want to thank you guys for watching. Please like and enjoy the video. Comment what other stocks we should take a look at. If you disagree with anything on this list, let me know. Some of them are a little old and we need to reanalyze. October 2023. So I can update the date for the Birkenstock now that I've reanalyzed it. But Union Pacific could be updated. Oracle as well. And we'll just continue with this running list. Right now we have 43 companies with solid fundamentals, just trying to get in at the right price on them. But I want this list to grow. I want to have over 100 companies that I can take a look at any time and figure out how I want to trade, if I want to invest. And go from there. So if this is the type of thing that you're into, please subscribe, check out the videos on the individual stocks, and follow along. And I'll catch you next time.